Hey, Christian Conrad here with 3, and today we're going to be talking about the largest con in corporate history, the Adani case. It's been a year and a half since Hindenburg's research dropped their bombshell report on the Adani Group, accusing them of running the largest con in corporate history. Despite this and over 40 independent media investigations backing up their claims, India's marketing regulator, SEBI, has taken no public action against Adani. In that report, which wasn't just some light reading, we're talking about hundreds of pages of citations, Hindenburg found out that $218 billion Indian conglomerate Adani Group has engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. Gautam Adani, founder and chairman of the Adani Group, has amassed a net worth of roughly $120 billion, adding over $100 billion in the last 3 years, largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% in that period. These Adani companies have taken on large debts, often using their inflated stock as collateral, putting the group in a risky financial position. Many of the top leaders are the Adani family members, which gives them tight control over the group's finances and decisions. The Adani Group has faced 4 major government fraud investigations in the past, involving allegations of money laundering, tax fraud, and corruption. Family members allegedly created offshore shell companies to generate fake turnover and move money out of the listed companies. So what was the SEBI response? Instead, on June 27, 2024, SEBI sent Hindenburg a show cause notice. This notice didn't point out any factual errors in Hindenburg's 106-page analysis. Rather, it claimed their disclosure about their short position, which they repeatedly disclosed, was not detailed enough. SEBI also said Hindenburg's report was reckless for quoting a banned broker who described how SEBI knew about and participated in schemes allowing firms like Adani to break rules using offshore entities. Buried all the way down on page 24 of the 46-page notice, SEBI finally touched on the substance of the research, where it made the nebulous allegation that their report contained certain misrepresentations, inaccurate statements meant to mislead readers. Let's talk about the evidence. There's a mounting collection of evidence from dozens of independent media investigations. January 29, 2023, Newsdrum reported that Gautam Adani had failed to disclose his interest in a media channel, India TV, where he appeared for an exclusive interview on January 7, 2023, ahead of the FPO, that's follow on public offer, in Adani Enterprises. This corroborated a note in Hindenburg's report highlighting an entity connected to Adani, Milestone Trade Links, that had quietly taken a key stake in India TV. On February 1st, 2023, Forbes reported evidence indicating that Adani Group may have funneled its own money via opaque offshore funds to buy into its own follow-on public offering, FPO. This furthered Hindenburg's findings on many of the suspect shareholders. February 13, 2023. A Wire India article found that Adani International, an entity owned by a close associate of Vinod Adani, Cheng Chung-ling, was mentioned in 2 Enforcement Directorate change sheets in 2014 and 2017 in the Augusta Westland scam. That just so happened to be one of India's largest corruption scandals. In February 2023, a disinformation report by the Signpost found that the Adani Group almost certainly manipulated its own Wikipedia entries to puff up its entries with non-neutral PR additions. February 28, 2023, a Forbes article outlined how Vinod Adani structured key deals for the Adani Group through a web of entities in Mauritius and UAE and the British Virgin Islands, further cementing Vinod's role as a key related party. It also learned that he's an Indian citizen, contradicting Adani filings. March 23, 2023, the Financial Review released an investigation revealing hundreds of millions in accounting inconsistencies across Adani's coal projects in Australia. March 27, 2023, an article in Adani Watch detailed how an entity tied to close Adani associates, Chang Chung Ling, had been named by the Central Bureau of Investigation in an alleged criminal conspiracy relating to a coal tender process. The company Viam Trade Links was described as a proxy for Adani and many others. Hindenburg responded in July 2024. What they basically said was that they were surprised that SEBI seemed more interested in going after those exposing fraud than those committing it. They also pointed out that SEBI's job is to prevent fraudulent practices, not protect those engaged in them. The Indian Supreme Court noted that SEBI had drawn a blank in its investigation of Adani shareholders. In late June 2024, Adani's CFO described some notices from regulators as trivial, saying that he didn't expect them to be serious. Hindenburg's original Adani report cited documents from India's Directorate of Revenue Intelligence, DRI, alleging that Adani greatly overvalued imported power equipment. This was allegedly done using offshore shell companies to siphon and launder money from the Indian public. A later investigation by Adani Watch in December 2023 showed how offshore entities controlled by Vinod Adani received funds from this alleged over-invoicing. One complex structure involved a company invested in a Bermuda-based fund called Global Dynamic Opportunities Fund. That's GDOF. This fund then invested in IPE Plus Fund 1, registered in Mauritius, also a tax haven. The Financial Times found that GDOF's parent fund, the Bermuda-based Global Opportunities Fund, GOF, was used by two Adani associates to build and trade large positions in the Adani Group shares. These nested funds are managed by Indian Infoline, IIFL, now called 361. Indian Infoline is a publicly listed wealth management firm in India with a history of setting up complex fund structures. It was previously linked to the Wirecard scandal, Germany's largest fraud case. Whistleblower documents show that Madhabi Buch, the current chairperson of SEBI, and her husband had stakes in the same obscure offshore Bermuda funds. Buch and her husband Deval appeared to have opened an account with IPE Plus Fund 1 on June 5, 2015 in Singapore. A declaration of funds states that the source of their investment was salary, and estimates their net worth at $10 million. Madhabi was appointed a whole-time member of SEBI in April 2017. Just weeks before this appointment, on March 22, 2017, her husband Deval wrote in the Mauritius fund administrator Trident Trust about their investment in GDOF. He registered to be the sole person authorized to operate the accounts, seemingly moving the assets out of his wife's name before her politically sensitive appointment. A later account statement from February 26, 2018, sent to Madhabi's private email, reveals the full details of the structure. GDOF Cell 90. This is the exact same Mauritius-registered cell of the fund, several layers deep, in a complex structure reportedly used by Vinod Adani. The Booch's stake was worth $872,762.25 at the time. On February 25, 2018, during Booch's tenure as a whole-time member of SEBI, documents show she personally wrote to Indian Infoline using her private Gmail account, doing business through her husband's name to redeem the units in the fund. Now, what this tells us is that despite the existence of thousands of mainstream, reputable offshore Indian mutual fund products, an industry she now regulates, documents show SEBI chairperson and her husband had stakes in a multi-layered offshore fund structure with very small assets. If SEBI really wanted to find the offshore fund holders, perhaps the SEBI chairperson could have started by looking in the mirror. It's unsurprising that SEBI was reluctant to follow a trail that may have led to its own chairperson. To date, SEBI has taken no action against other suspect Adani shareholders operated by India Infoline. From April 27 to March 2022, while Madhabi Booch was a whole-time member and later chairperson at SEBI, she had a 100% interest in an offshore Singaporean consultant firm called Agora Partners. On March 16, 2022, she quietly transferred the shares to her husband. This offshore Singaporean entity is exempt from disclosing financial statements, so it's unclear how much revenue it derives from its consulting business and from whom. Crucial information for assessing the propriety of the chairperson's external business interest. During her tenure as a whole-time member at SEBI, her husband was appointed as a senior advisor to Blackstone, a global private equity firm and large investor in India, in 2019. He had not previously worked for a fund in real estate or capital markets, according to his LinkedIn profile. Blackstone has been one of the largest investors and sponsors of real estate investment trusts, a new asset class in India. During Duvall's time as advisor to Blackstone and Madhabi a chairperson in March 2022, SEBI proposed, approved, and facilitated major REIT regulation changes. During this time, Blackstone crashed out its entire stake in Embassy RETI in December 2023, valued at about $853 million in India's largest block trade of the year. At industry conferences, she has promoted REITs as her favorite products for the future and urged investors to look positively upon the asset class. While making these statements, she omitted to mention that Blackstone, which her husband advises, stands to gain significantly from the asset class. She currently has a 99% stake in an Indian consulting business called Agora Advisory, which her husband is a director of. In 2022, this entity reported $261,000 in revenue from consulting, 4.4 times her disclosed salary at SEBI. These Hindenburg findings raise questions that merit further investigation. The report suggests that SEBI's actions send a clear message to every public company in India. If you're having difficulty with quarterly results or want your stock price to be higher, simply have a relative set up an offshore shell empire to boost the stock or improve your financials. The incentives are clear. The gains from fraudulent activities outweigh the small risks of potential slap-on-the-wrist fines from regulators. The message to investors in India is equally loud. They have no real protection from fraud. Corporate governance in India appears to be a myth for businessmen who can buy influence. Meanwhile, the government has once again sent the message that critics of those in power will be punished, whether by regulatory action or strategic media leaks. Hindenburg expects SEBI may try to impose bans or fines on them to discourage further criticism of Indian companies. India is a vibrant country with unlimited economic potential that faces issues of fraud and corruption. Just as all countries do, transparency is always the best remedy. This has been a 3 production of the largest con in corporate history, the Adani Case, presented by Christian Conrad.